Exact date state pensioners will get £575 extra. State pensioners, listen up. If you're relying on your pension, you could be getting an extra £575, and the exact date it hits your account has just been confirmed. Imagine a little financial boost landing just when you need it most. This could make a real difference to your bills, groceries, and everyday life. In this video, we're breaking down exactly when you'll get it, who qualifies, and how to make sure you don't miss out. Welcome to UK Pension Update, your go-to source for the latest news, tips, and updates on pensions across the UK. If you're a state pensioner or planning for retirement, you're in the right place. Today, we've got crucial news about an extra £575 payment for pensioners, exactly when it's coming, who qualifies, and how to make sure you get it. Stick around, because this is information you don't want to miss. First, let's get straight to the numbers. The extra £575 is part of the government's ongoing support for pensioners, designed to help with the rising cost of living, particularly as energy bills and food prices continue to challenge household budgets across the country. For context, this is not a one-off payment. It's part of a series of measures that aim to support older citizens who may be particularly vulnerable to financial pressures. So, when will this money hit your account? According to the latest government announcement, the extra £575 will be added directly to state pension payments starting from the 14th of January 2026. That's just a few weeks away, meaning pensioners don't have long to wait. It's important to note that the payment will appear automatically for most people, so if you're already receiving your state pension via bank transfer, it should arrive at the same time as your usual pension payment. For those who get paid weekly or every 4 weeks, the extra payment will be prorated to match your normal schedule, so everyone receives their fair share. The government has emphasized that this support is targeted at people who are eligible for the full state pension. If you've only received part of your pension or have gaps in your national insurance record, the amount you receive could differ. But even so, the majority of pensioners who rely on the state pension as their primary income will see a significant boost in January. Now, you might be wondering why this payment is happening and what it means for you personally. The reality is that the cost of living crisis has been particularly hard on pensioners. While many older adults have savings, others rely entirely on their state pension. Inflation has been eroding the value of fixed incomes, making it harder to cover essential expenses like heating, groceries, and healthcare. This £575 boost is designed to offset some of those pressures and ensure that pensioners can maintain a reasonable standard of living in the coming months. It's also worth noting that this isn't the first time the government has introduced additional payments for pensioners. In recent years, there have been energy support payments, winter fuel payments, and other top-ups aimed at helping older adults. What's different about this payment is that it's a one-off lump sum added to the regular state pension rather than a separate benefit you need to apply for. This makes it simpler for recipients to access the funds and reduces administrative delays that sometimes occur with other support programs. For those of you who are detail-oriented, here's exactly how it works. If you receive the state pension monthly, you will see the extra £575 spread across your usual payment. For example, if your state pension normally arrives on the 14th of the month, then starting on 14 January 2026, your bank account should show your regular pension plus the additional £575. If your pension is paid weekly, the payment will be divided into smaller amounts across your regular payments, ensuring that no one gets a sudden, unexpected lump sum that could affect benefits or tax arrangements. It's also important to understand who does not qualify for this extra payment. While the majority of state pensioners will benefit, certain groups may not be eligible. For instance, individuals who receive their pension through certain international arrangements or who do not meet the minimum national insurance contribution requirements may not see the full £575. However, the government has made it clear that almost everyone who qualifies for the full state pension in the UK will automatically receive this support, meaning no application or special request is necessary. One of the common questions pensioners ask is whether this payment will be taxed. The answer is generally no. Since the extra £575 is considered part of your state pension, it is usually tax-free for most recipients. That means what you see in your account is what you get to spend, without any deductions. However, if you have other sources of income that push you into a higher tax bracket, it's always worth checking with HMRC to confirm your specific situation. There's also been some confusion around whether this payment will affect other benefits. According to official guidance, the £575 payment is treated as part of your pension and should not reduce your entitlement to means-tested benefits such as pension credit. In other words, it's designed to supplement, not replace, existing support for those who need it most. Beyond the financial aspect, there's a broader picture to consider. The government's announcement reflects a recognition that pensioners face unique economic pressures. By introducing a lump sum increase, policymakers aim to provide immediate relief at a time when bills are high and inflation is still affecting day-to-day expenses. This is part of a wider strategy to support older adults in a way that is predictable and easy to access. For families, this payment could also have a ripple effect. Extra money in the hands of pensioners often helps not only the individual but also the household. Some pensioners use these funds to cover household bills, while others may support adult children, grandchildren, or community projects. The £575 might seem like a single figure, but its impact can be quite significant in everyday life, giving peace of mind to both recipients and their families. It's also worth noting that financial experts advise pensioners to plan ahead for this extra payment. While it's tempting to spend it immediately, some may find it more beneficial to allocate part of it to essential expenses like energy bills or groceries, while putting the remainder into savings or debt reduction. Since this is a one-time payment, careful planning can help stretch the benefits over the months when costs are highest. For those who are tech-savvy, it's easy to check your pension account online and confirm that the extra £575 has been added. Most banks and pension portals will provide a clear breakdown of your monthly payment, showing both your regular pension and the additional support. If there are any discrepancies, it's crucial to contact the pension service as soon as possible to resolve them. Finally, it's worth remembering that while £575 is a helpful boost, it is not a permanent increase. Pensioners should continue to budget carefully and remain aware of other sources of support if needed. The government has indicated that there may be further measures in the future, but for now, this payment represents an immediate, tangible benefit for millions of older adults across the UK. In summary, the key points every pensioner should know are clear. The extra £575 payment will begin on 14 January 2026. It is added directly to your state pension, it generally won't be taxed, and it should not affect other benefits. Thanks for watching UK Pension Update. If you found this video helpful, don't forget to hit that like button and subscribe for the latest pension news and updates straight from the UK. Comment below if you've got questions about your state pension or want us to cover specific pension updates. We're here to keep you informed. And remember, your extra £575 is just around the corner, so stay prepared and stay updated.